Okay, so obviously you are here because of what you've probably been seeing online. Whether it be between maybe some YouTube comments or some YouTube videos, or even just seeing something on Reddit and you're like, okay, what happened to Royal Bank stock? And today, I'm going to break it down why it dropped 66% after hours. It was a huge drop. Let's get down to it. So first off, I really want to say I'm sorry to all the people I deleted your comments on. I just thought it was just BS. I thought somebody was yanking my chain. Why is Royal stock down 66%? You're an idiot for recommending this stock and things like that. And I would never recommend stocks. I always say do your own research. But there is a reason behind why there was a massive drop. As we've seen in just before the closing time of the market on Friday, we've seen that there was a big ramp up in actual volume buying the stock. And we know it was buying because, of course, it didn't go negative, it stayed positive. And, of course, that is usually going to mean that there's going to be a pretty hectic after hours. Now, actually, I've seen stocks do this before after hours, and it actually happens more often than you actually think. And there's only one explanation I've ever seen online and I've ever read about, and all the different books and things that I've read about the stock market, there's only been one explanation as to why stocks will drop 40, 50, 80, 90% after hours. And that is because somebody, we don't know who obviously, but somebody put through a massive sell order at market price. Now basically what happens then is that person will then sell all of their stock at market price. Well, we can, as investors, we can catch people like that sometimes. It doesn't always work like this, and most people with a trading platform, it will actually either block you from doing this, or what will happen is it just will totally ignore your order until the stock price goes down to a really low level. But somebody can go on, if they have the right resources to be able to do so, they can go onto their own trading platform and say, well, that stock right now is currently worth $100 and whatever dollars per share. I'm going to offer to buy it at $33 per share. And then they can sit there all day and they can wait. And of course it's called fishing, I guess you could say. I've heard of many different terms. I personally call it fishing, and it's fishing for idiots. And basically what happens is if a trading platform sees that your bid is the only one open, not getting hit, not picking up stock, and somebody has a market sell, means that they're willing to sell it at any price. And this person, as we see in the volume, had a massive load that they wanted to sell off. There was not enough buyers on the market, so of course the market defaulted to the person who said, I'm willing to pay $30-something per share. We really only see this on a couple of trading platforms, and the most notable one is Google. Now, when it comes down to Google, they're showing a few different things, of course, and they're trying to be as perfect as possible, but usually when things like this happen, it's not saying the stock is going to open up at $30 per share. If it does, I would be extremely surprised. What's probably going to happen is it's going to be corrected for Monday. The person who bought the stock got hella lucky, and the person who sold it got screwed. Things like this happen. Things like this happen in pre- and aftermarket trading. There's not a lot of volume usually in pre- and aftermarket trading, so you can go fishing if you have the ability to do so. However, this is not a way of ethically trading, I guess you could say, but people do it. Now, where can we see the differences? So if I go on my phone right now, the only place I will see it is through Google. If I go onto my own trading platform, if I go to the Canadian stock of Royal Bank, I don't see it at all. Which is why I'm saying it's going to be recovering quickly, literally probably as soon as it opens. Meanwhile, on the American side, the American NYSE Royal Bank stock, I can go on there, and currently shows the stock at $0, an error. So, what that tells to me is either there was an error, or this happened, where somebody had such a low buy, and somebody had a market sell, and basically the person who had that extremely low buy, who was fishing for a low price, got lucky, and the person who had the market sell got screwed. Again, this is a real world situation. People get screwed all the time. You have to go in with your trades and actually say that you are willing to buy at a certain price and you are willing to sell at a certain price. If you do not do that, and if you had a market buy, let's say for Sundial at one point, you may have gotten unlucky when the stock was trading at $2 and random people had it for sale for $10 and $12. The reason why I'm saying this is because I've seen stories online about Sundial and people buying it and they thought a market buy was a good idea and they ended up buying it at $10. The stock price technically jumped for a millisecond and came back down because of course there's hundreds of millions of trades happening in that stock per day at one point. At one point on that day it was actually trading at 2 billion shares per day. So this is why you need to set your price, because things like this happen. You're not going to be really freaking out. The person who bought it, he's going to be extremely happier than all hell, but the person who sold it is going to get screwed, and people who are on the internet who like to speculate will then say, oh my god, the rich billionaires are against us. Well, guess what? I guess you could say they are, but at the same time, it's the stupid idiot who sold at market price and the lucky loser, I'm going to call him, buying at such a low price that somebody got screwed, somebody got a good deal. Things like that happen every single day. I hope that this explanation kind of makes sense. It may or may not be the real explanation, but this is what I've seen about 15 to 16 times in the past. So, I hope that you've enjoyed today's video. If you have, hit that like button and subscribe. I'll see you guys again next time.